not so long ago, George Soros commented that China is in for the hard landing, and he's one of the few naysayers that are pessimistic about Chinese growth. But his hard landing comments received some backlash from the Chinese media, and they feel that he is declaring war on the Chinese yuan. But do you think that that is his true intention, and do you think that he is likely to succeed if he were to, let's say, short the yuan?
I think if you want to short the renminbi, basically you've got to be able to borrow it, and the borrowing cost for renminbi has been coming down because of shifts in the policy rates. But the question is, because it's not a totally free currency, it's not as easy to short as perhaps the Hong Kong dollar or the ringgit, for example. But bear in mind, at any one time, governments can instill some forms of capital control, or they may not accelerate the opening up of the renminbi. But obviously, it's a great time because we know come October, right? IMF has allowed the renminbi to be part of the SDR basket, and obviously he's playing against that timeline. From now till October, they will open it up, right? And then that will give you an opportunity to borrow more renminbi to go short.
But by then, do you think it's still very hard? Renminbi will still fall? Because it will take some time, right? You have to wait until October.
Yeah, to build up a position. But there's other ways. You can, short the Chinese shares in Hong Kong market, for example. You can also try to destabilize the Hong Kong dollar because you think that they will depeg against the US dollar. That's what a lot of people are talking about. But I mean, coming back to the issue of whether it's a hard landing, soft landing, or well, as long as it lands, I think that's a good start, right? But Chinese economic growth is not 7%, 10%, or 12%. But the reality is it's much stronger than most of the developed economies, right? And we're growing from a bigger engine now, right? And if you were to compare the growth of China now to 10 years ago, it's more diversified. So as an economy, it's actually it's more well-rounded than anything else, right? And frankly speaking, if China has a hard landing, then I think the world's got big problems. As we can see now, because China's economic growth has slowed down, commodity prices have collapsed. Have a look at what coffee has done in the last 24 months.
Coffee.
Yeah, have a look at coffee. Never mind about what the headline numbers are for, iron ore, or whether it's gold and all these other things. Just have a look at coffee, things which you wouldn't even consider, right? And then you can imagine, what is the impact of China with economic slowdown? That's what it is. What is the impact if China has a hard landing? I can tell you, every major central banker in the world will have sleepless nights. And they'll be pumping liquidity, lowering interest rates, or if not, pushing down to negative rates. Right? So if that scenario does happen, so there's opportunities.
So would you see that the market will try to adjust itself, or to try to prevent such a situation?
I think, markets are already trying to adjust as it is now. I think in China's case, obviously the Chinese government has already instilled certain policies towards trying to stimulate economic growth. One of them was basically lower policy rates, right? And the second one is lower your reserve requirement ratio. At 21%, that's the highest in the world. And if you actually understand Chinese government, there's a lot of flexibility for the Chinese government to actually, increase liquidity in the marketplace. It's a bit different from other places in the world. If you're close to 0% interest rates, you can't lower interest rates anymore. They've got nothing else to do. As Janet Yellen said, or was asked yesterday, with interest rates so low in America, what other instruments do they have to stimulate growth?
It's hard.
It's hard. It's hard. The Chinese government's got a huge coffer. They can do more infrastructure spending if they want to.